Hello and welcome to this special broadcast. India's GDP grew at 6.2% in the third quarter of the current year, that is October, November, December 2024. This 6.2 is in line with CNBC-TV18 poll, which also threw up a 6.2 number. The GDP numbers for the last two quarters have also been revised, that is Q1 and Q2 of the current year. With this, the government says, or rather the Ministry of Statistics forecasts FY25 growth to come in at 6.5%, which is a little higher than the 6.4% that it forecast on Jan 7th, when the first advance estimates came. But 6.5 is still a tad lower than what RBI had forecast. Their numbers stood at 6.6 when it was finally revised. So, well, 6.5 is a bit of a saving grace, a better number. But more importantly, the second quarter, which we thought was an abysmal quarter at 5.4%, that also has been revised higher at 5.6%. So it was a disastrous number, but not as bad as we thought. I think the more important numbers we need to note are the revisions of 23-24, the year before, and the revision of 22-23. Now, last year, we should have been very happy. We actually grew by 9.2%. The number that was earlier told to us was 8.2%. So drastic revision in the 23-24 numbers by 1 percentage point. And this is despite the fact that the even previous number, 22-23, has been revised higher from the earlier 7% to 7.6%. So across the board revisions, 22-23, a revision of 60 basis points, 23-24, a revision of 100 basis points, and a slight revision higher in the current year as well, from 6.4 to 6.5%. But the one number that we were all worried about, third quarter, as the poll said, 6.2%. With this, let me turn it over to the experts. Joining me are the former Chief Statistician of India, Dr. Pranab Sen. Also joining us today, Kaushik Das, Chief Economist at Deutsche Bank India, Abhishek Upadhyay of ICICI Securities Primary Dealership, and Rajani Sinha, the economist from CareEdge Ratings. Gentlemen, and Rajani, thank you very much for your time. Dr. Sen, you have been there, done that in terms of statistics. Should we be happy that the past is better than we thought? Or should we bemoan that 6.2 only? I mean, it would have been better if October, November, December were better than 6.2. What is your first reaction to the numbers?
Lata, if the past had not been revised upwards, the 6.2% would have gone up.
Yes, much more.
So, yeah, I think you should be happy.
Okay, that's well put, Dr. Sen. You're absolutely right that over a 1 percentage point increase, we have seen the number still come in at 6.2. So let me get to those who are looking at the nitty-gritties. Abhishek, pointedly, what about the third quarter numbers exhilarated you?
So, as was expected, the acceleration in the third quarter compared to 5.6 growth in the second quarter was mainly led by agriculture and government spending. So, government spending growth, it seems, has picked up quite strongly, above 8%. Agri growth is also, I think, above 5%.
Yeah, 5.6.
Yes, so which is a sharper acceleration compared to earlier growth, which was in the 2.7, 2.8 ballpark for first half. So these are the two main segments. Manufacturing growth also has picked up, but quite modestly. I think the bigger story, as you mentioned, is that there has been strong upward revisions to earlier numbers, which then indicates a possibility of upward revision to this year's growth forecast as well, because it is a sign that growth momentum was stronger as we headed into this fiscal year. You have to note that the growth numbers that we have got for this year are based on a different approach, based on the benchmark indicator approach. And these high base or volatility in the base for the earlier 2 years has not really impacted this year's growth. I would assume that growth in the first half of the year could have been somewhat stronger than what is currently penciled in, and therefore some scope for upward revision. Last point I will make here, Lata, is that the growth for the current quarter, the Jan-March quarter, is implied to be very strong as per GDP, above 7.5%. So possible this may not be realized, but you may still get a full year number which is in line with 6.5% or maybe a tad higher.
Okay. If you subtract the 3 quarters from the full year forecast, we should generate a 7.5% growth in Q4, you're saying, which looks like a tall order. But let me take the first part of your answer where you agreed with Dr. Sen that we should be happy. Now, I have worked out the numbers. The Q3 of last year, we thought was 39.9 lakh crore GDP. But what we now discover is that it is 40.6 lakh crore. So good 60,000 crore more. In spite of the previous Q3 being, 60,000 crore more, we have generated a 6.2% growth. So Q3 is actually a number which the market and the economy should celebrate. Kaushik Das, your first thoughts. Do you think that we should expect more upward revisions, that this 6.5 is attainable, that Q4 will therefore be, a good 7% number?
So, Lata, first of all, there are different ways to look at this number. And as you mentioned, and Dr. Sen mentioned, that if the number stayed at 8.6 for October, December 23, which was the initial number, this number should have been above 7.5%. That's one way to look at it. But we know that the GDP data is, there's a lot of issues in it, and there's this element called discrepancy, and we have to figure out how this data have been calculated, revisions, all these factors. But bottom line is, even if the July-September number has been revised up 5.6, suppose it gets revised higher to 6%, it is still below the potential growth rate at 7% plus. And there has been a slowdown through FY25. No matter how you look at it, it doesn't matter what the GDP number sometimes the revisions are telling you. But the point is that the slowdown is in motion. October, December, the number at 6.2, whether it could have been higher or not, this is the number that we have at this stage. Policymakers will use this number to decide what to do, as far as policy actions are concerned. January, March, we could be at 6.5, 6.7. We've had the Mahakumbh, Mela, and for that, there could be some increase in GDP. Who knows? But I think the bottom line is that India's growth is about 6.5% this year and next year also, given the various risks that are there from the global, macro space. We would be comfortable to keep it at 6.5%. And therefore, growth continues to be below the potential rate of 7%. And therefore, you need policy actions to support that growth. Now, the thing is, we know that India's GDP deflator is not calculated in the way it should be. We give more weight to WPI. That kind of makes things complicated. The real GDP is artificially boosted at times. So all those factors have to be taken into consideration. But the broad view is that India is going through a cyclical slowdown. But the worst is behind us in July, September. From here, we should see incremental improvement going forward. But still, you'll remain below the potential growth rate of the economy for some time. And therefore, you need some policy action from the RBI. And government has already done the tax cuts. So that'll also feed into the real economy with some lag. And you'll see probably FY26 at 6.5% growth.
Okay. Well, that's a very no-nonsense way of approaching that even if it is not 6.4 but 6.5, we are still growing below potential, and there are, of course, headwinds. A rate cut and other kinds of help is called for. Rajni Sinha, before I come to the policy prescriptions, is there any standout number in the constituents that you want to speak about? Agriculture, I thought, was a standout number, but your thoughts on any specific sectors?
Yeah. I would like to highlight the aspect that if you look at the overall GDP number at 6.2%, it's broadly in line with market expectations. And it's also in line with our expectations. But I would say what the worrying part is that this growth has been mainly, agriculture growth is very high, like you highlighted. It's at more than 5%, it's turning out higher than what the market was expecting. But the concerning area is that manufacturing, which had shown a moderation in second quarter, and we were looking forward to seeing some improvement there the improvement has been very minor. So manufacturing sector continues to record weak growth. The other concerning aspect is that investment growth, which had, seen a sharp moderation in second quarter, and we attributed it to election-related uncertainties in the first and second quarter. And we were expecting investment to pick up in the third quarter. However, if you look at investment GDP, that also remains weak. It's broadly around the same as the growth recorded in the second quarter. So I would say while overall growth is in line with market expectations, I am concerned about weak investment and weak manufacturing growth.
Actually, that's extremely well spotted. The gross fixed capital formation at about 15 lakh crore is actually lower than what it was in the second quarter. Second quarter, if you look at the aggregate number, it is 15.4 lakh crore and it's dropped to actually 15.05. So this extraordinary big capex which the government gave in December doesn't seem to have moved the needle much, but who knows? In India, the past is uncertain. So we may get a different number next time. But for the moment, it looks like capex is in pain and it has not kept pace. But by the same yardstick, private expenditure has grown by 6.9%, which is an improvement over the first two quarters. Abhishek, you don't trust these numbers of, the expenditure side. Any comment at all? Would you say that consumption has picked up because we now have a personal final consumption expenditure of 6.9%? Should we be happy?
Lata, so Kaushik mentioned that discrepancies plays a big role, in GDP accounts. So, last year, full year growth, as we now know, is, above 9%. Private consumption growth would have been much lower. And this year, when growth has slowed down, private consumption growth on the GDP side shows a faster number. So I would not, look at that number closely, especially when making interpretations about quarterly data. Better to look at high frequency data there as well as the supply side estimates. What the high frequency data indicates is that there are signs, economy has turned a corner, both in terms of, discretionary consumption, looking at the auto sales numbers over the last quarter, as well as demand for consumer staples was also reasonably strong. Looking at surveys by market research companies for both rural areas and urban areas. Plus, one issue has been, GST collections, which are a good proxy, real-time proxy to gauge consumption demand, had weakened quite a bit after, double-digit growth seen in the earlier months of the fiscal. Between August and December, growth in GST collections was in single digits, but January again shows a higher growth there. So there are some signs, consumption demand is recovering, and you would assume that as inflation normalizes, it is possible consumption demand could become somewhat more broad-based. At the same time, it is difficult to expect a very strong growth there, given headwinds, again, from global side, but also tight domestic financial conditions, and a situation where banks still will not be extending credit in as strong a way as they had in the past.
Okay. Yeah, those are all the weaknesses. You were speaking about strong GST collections in January. We have some forecasts for February auto sales, and they are looking quite terrible. So I don't know what to make of the fourth quarter. Have to take a compulsory break, commercial break. I'll come back and discuss fourth quarter with my guests. Back in a jiffy. Welcome back to our special show, State of the Economy. We've been discussing the just released GDP numbers for the third quarter and the revised numbers for 3 years, 22-23, 23-24, 24-25, with a bunch of elite economists. I have been speaking with Dr. Pranab Sen, Kaushik Das, Abhishek Upadhyay, and Rajni Sinha. Gentlemen, and Rajni, thank you very much for your patience and continuing to be with us. Let me quickly ask you the fourth quarter estimates from what you already know about the first 9 months. The first 9-month growth, of course, is 6.2% in terms of GVA and 6.1% in terms of GDP. Kaushik, what's your current fourth quarter number and full year number for the current year?
So we have a 6.5% number, and we had a GDP number close to 6.5%. So I'm not surprised with this revision that has happened to the previous numbers, that 5.6 from 5.4. Whether it goes higher later, we'll see. But
What's
for a
the
while,
fourth
I'm
quarter
feeling
number?
it's 6.5 at this
Okay.
stage. I'll have to
Okay.
see what revisions have been made to the January,
Previous.
March of 24. But I'm feeling nice today because I gave a 6.2% forecast. Very few times you get it bang on target. So
Yeah.
that way it's nice. But one key point, what I like what Rajni pointed out is that investments is below 6%. So that is one area where we need to focus. One good thing is that the government has picked up spending from December. So January, March, and April, June, July, September, all these numbers on a year-on-year basis will look very strong because last year, April, September was very low from the government spending side. But the problem is on the private capex side, given the uncertainty in the global macro space, any manufacturer, those who also export, I doubt whether they'll want to increase capex in a big way in this environment. So, you probably would see subdued investment growth for some more time. And hopefully the tax measures and the rate cuts, the macroprudential norms which have been eased over a period of time, that helps sustain the consumption growth on the urban side. Hopefully you get a good monsoon, the rural sector does well, and you get to that 6.5% growth in FY26.
Abhishek, I just want to ask you, this 6.1% is the 9-month GDP growth. Over this 6.1, if we have to achieve 6.5 for the full year, as you say, the asking rate for Q4 is unrealistic, isn't it?
We were assuming growth in October-March period to be closer to 6.5. Based on the fresh estimates, it seems NSO is predicting 6.9% kind of average. And 6.2 was slightly lower than our estimate. So that makes this acceleration, from Q3 to Q4 even more stark. Again, it is likely government spending and agri growth will have to play a key role, but these are already reasonably strong in the third quarter itself. So it is the other sectors which will have to basically take the burden here. So risk could be towards the downside there. But we have to see, capex growth, etc., how it pans out. We expected capex growth to be better in Q3. It seems it is not, so strong. Government has released the fiscal numbers just now also, which shows strong capex momentum from December has continued into January with a strong YOY growth there. But I agree, risk to growth for current quarter could be on the downside.
Okay, what's your number now?
We are not, we'll have to see how the base, etc. is moved, but we will not change that number much, Lata. So we'll still assume closer to 6.5, maybe slightly higher.
Okay. So there is a danger to the 6.5 GDP growth second advance estimate forecast going wrong because it is assuming too strong a growth in the fourth quarter. Rajni, any thoughts? What is your fourth quarter number? And do you think this 6.5, which MOSPI is forecasting, may not be attained?
Let us assume it is achievable. We are expecting a GDP growth of around 7% in the fourth quarter. So we are expecting this consumption pickup that we have seen in the third quarter. We expect it to gather further momentum. Because as food inflation moderates, we will see consumption picking up, and also we will see impact of the Mahakumbh. So we are expecting consumption GDP to pick up. Investment GDP, while it has disappointed in the third quarter, it should pick up in the fourth quarter because government capex has picked up quite sharp.
Fair enough.
So hence we are expecting a growth of around 7%. And for the full year, we are expecting around 6.4 to 6.5% growth for
Okay, so the MOSPI 6.5% might still be achieved. Well, it's not a big jump from 6.4 to 6.5, but nevertheless. Dr. Sen, your final thoughts after you look at all the numbers. It's a little confusing that, all the numbers in the past have been revised higher. Would you say the economy is in a slowdown mode at all? Or do you think it is just the base effect and we have coasted on fine despite such a large base?
No, it depends on how you interpret the word slowdown, Lata. Yes, I think we are. We are starting to come back to what I think all of us collectively consider the sustainable growth for the country, to around 6.5%. But the expectations that had been built up was that we are a 7.5% plus economy. So compared to that, yes, it does look like a slowdown.
Okay.
But about the details, the sort of changes in the previous year's estimates actually complicates the calculation a little bit, right? Because a lot depends on how it's distributed across the quarters.
Yes, sir.
So I've got my original forecast for the fourth quarter was around 6.5%, slightly shy of that. But now with the changes, everything depends on what they've done to quarter four of the previous, which I have not seen.
Okay, no, that's a fair point, sir. But just a very quick comment from you on how you will see the global headwinds, the tariff headwinds impacting next year. Should we be prepared for a slower growth because of these likely tariff headwinds? I mean, sheer uncertainty, even if our own, exports as a percentage of GDP to the US is just 2% or even less than that. In spite of it, do you think this uncertainty will hit us, or we can still manage because of the boost from liquidity, rates, budget? What's your sense of next year?
Well, the point is that the headwinds are strong. So it's going to be reflected certainly in our trade numbers. It will also get reflected in our capex numbers. I would imagine that they would be getting even slower than they are now. And it's pretty bad at the moment. Now, the question is, can the government actually overcome this and push things forward? Now, if we take the budget numbers as presented, that's not going to help a whole lot.
Okay.
So unless there is revision in the budget at some point, I think we are looking for pretty strong headwinds next year.
Okay. Well, quickly, if you all can give me a monosyllabic answer, the rest of you, in terms of what is your current FY26 number? Kaushik?
Lata?
Your FY26 number, GDP?
Yeah, GDP is 6.5%.
Okay. Abhishek?
6.8%.
Rajni?
7%.
Sorry?
0.7.
Oh, that's good. Okay. Well, gentlemen and Rajni, thank you very much for joining me. The key takeaway from the numbers is that this is a good number. At third quarter GDP at 6.2% is good because we thought the base was 8.6%. The base actually is, well over 9%, 9.2 if I'm not mistaken. The last year's base has been revised higher by about 60,000 crores. So the third quarter number of 6.2 should be considered good. Overall, the economy has been growing faster than we thought. The numbers are all revised to revised higher than what we earlier thought. So my key takeaway would be that the GDP numbers should make us happy. The economy is growing a little better than we thought, but there is no mistaking the slowdown from the previous year and the fact that we could face headwinds next year. On that note, we wind up this discussion on the state of the economy. Do keep it with CNBC-TV18. There's lots more lined up for you.